Coming up on Finance and Technology Insights with Brian and Eric, Brian talks about Secure Act 2.0 and what that means for retirees and retirement accounts. And I go into the LastPass hack. Stay tuned.
Welcome to Finance and Technology Insights with Eric and Brian. We explore the intersection of finance and technology and bring you the latest analysis on how these two industries are shaping the world around us. I'm Brian Williams from Northshire Consulting. He's Eric Buhrendorf from EVERNET. And you can find me at northshireconsulting.com. Our social media platforms are 401k and beyond. And here's Eric for his introduction.
And I'm Eric Buhrendorf of EVERNET Consulting. You can find us at evernetco.com. Schedule a discovery call with me to talk about all things IT and whatever. Good. Going on at work. Slow week. We're now December. We're recording Tuesday, December 27th. It's slow week for us, although we are operational. I have some people that are out for the week, but and some business is definitely happening. What about you?
Yeah, I mean the biggest thing for us, which was definitely a good thing and definitely something that we followed over the week, was the passing of the Secure Act 2. And I was kind of teasing you about that, but it did pass. So it passed this through the Senate on Thursday and then the House on Friday. And it's
what is the Secure Act?
Yeah, Secure Act 2.0. So Secure Act 1.0 was the past buzzer beater again at the end of 2019. So this time around, they added it to the omnibus spending bill, which is, one of those, the government's going to shut down, that whole exhausting process. So it was just inserted in their 4,000-page bill. Secure Act.
Just 4,000, huh?
Just 4,000, yeah. But if you ever read those things, it's kind of interesting. The number of words per page is actually pretty small because they put a lot of headlines in with big fonts, and then they number every line for reference. So the margins are pretty narrow. So again, not that probably most of them didn't read it, but I actually did scan through all the Secure Act stuff that starts, I believe, at page 2282. So I did go through that. Let's see what he's pulling up here. Yeah.
Is this? I just Googled it, and Fidelity looks like it has a page here. Key takeaways: the age to start taking RMDs increases to 73 in 2000. What's an RMD?
So that's the required minimum distribution. So they force you to take money out of a pre-tax IRA or 401k at a certain age, which is kind of a pain. But so the more we can move, so we can just pause on that because that's one of these ridiculous things. So it used to be 70 and a half, which everybody hated because for whatever reason they had a half year in there. Now they've actually moved it up to full years. So it's the year you turn that age. So the government does that because you have to take that money out on a pre-tax, which means you have to pay tax on it. So the government gets those tax dollars. And that's the sole purpose for having required minimum distribution. But it's one of those penny wise, pound foolish things because they'd actually be better off financially to get rid of the RMD and let people continue to grow the IRA on their own and then take the money when they retire, because the person is going to be a better investor than the government is. So rather than force them to take it out at age 73, it's like let them run to 100 and then clip it when they pass away. So every time they move these, it's actually beneficial to the government and beneficial to the people with the IRAs. So everybody's like, well, why do you even have the RMD? So anyway, that's so we've gone from 70 and a half to 75 in the manner of 3 years. So the later the better on those. So that's that.
What else? The penalty for failing to take an RMD will decrease to 25% of the RMD amount from 50% currently, and 10% if corrected in a timely manner for IRAs.
Yeah, so that penalty was excessive. So a lot of people, especially again, small people with not small people, but people with smaller accounts, and sometimes people who are less financially literate didn't understand that they had to take money from their IRAs, and the 70 and a half thing was crazy. And if you had to take out 2,000 and you missed it, your penalty was $1,000. It's crazy to penalize people, 50%. So I'm glad that that's changed, because that
That's
was never,
wild.
yeah.
Starting in 24, RMDs will no longer be required from Roth accounts and employer retirement plans.
Yeah, that's a relatively minor deal, but it was kind of a pain because you had different rules for Roth IRA versus the Roth bucket and the 401k plan. So if you had Roth bucket in your 401k plan, you had to take RMDs, whereas if you had a Roth IRA, you did not. So usually the advice was to obviously roll the Roth money out of the 401k if you were retired, but having the same rules for both sides of the transaction makes sense now. So that's a good thing.
Catch-up contributions will increase in 2025 for 401k, 403b, government plans, and IRA account holders.
Yeah, that's so what they did there is they're going to key the increases. It's going to be tied to inflation, which is a good thing. So anytime you can allow people to put more money away. So you always have two different limits. You have the limit that everybody can put into their 401ks and IRAs, and then you have a catch-up provision. So those people 50 and older can put in a little bit more, in essence, to catch up for the years that they missed. So now those catch-up provisions are a lot higher than they were before. So it's a good thing.
Defined contribution retirement plans will be able to add an emergency savings account associated with a Roth account.
Yeah, so this is okay. I'm kind of neutral on this. It's one of those things that sound good in theory. The mechanics behind it, and the fact that the infrastructure has to be built on that, the 401k, and basically the rules were, your money's in your 401k, it's retirement money. If you have an emergency and you need to take money out, there's hardship. You can take a loan or hardship distribution, and that whole thing is taxable and penalized. But now they're saying, listen, if you need $1,000 and you can take it from your 401k, you can take it out without any sort of penalty or taxes on that. So it's probably a good thing. A lot of times what I'm doing now with the 401k plans is just saying, all right, you're putting this away for retirement, which is great, but a lot of times that becomes people's only savings because it's so easy and it's going through work and whatever. So I'll bring like another account application, just be like, listen, you're 22 years old. Don't max out your 401k plan. You're going to get married. You're going to have kids. You're going to have a million things that are going to come up before retirement. So take $25 a paycheck, put it in this separate account, and build up your emergency savings too. So I think the plans with good advisors, which I like to throw myself in, or have already kind of handled this problem. And I think this maybe will kind of complicate things and kind of add a feature that's not necessarily needed. But there's my thoughts on that.
All right. So why do they call it the Secure Act?
It's a silly acronym. So it's setting up every, let me think of this. It's setting up every American for retirement or something like that. So
Okay.
yeah, they use acronyms for all these.
All right. So this Fidelity article seems to catch the drift, I guess.
They did. So there's some other stuff in there that's I think is going to be a little bit bigger deal than some of the articles are talking about. So there's some significant tax credits in there for new businesses starting 401k plans. So the way it was structured before is you'd get a 50% credit of whatever your fees were for the first 3 years to encourage these businesses to start 401k plans to increase the coverage. And then there was an additional $500 for using automatic enrollment. So with Secure Act 2.0, automatic enrollment is now the standard for every plan. So a small business starts a 401k plan, all of their employees are automatically enrolled, and they have to go in to opt out. So all the numbers are better for those type of plans. They show that basically people are lazy, and if you ask them to sign up, they never will. And if you ask them to sign out, they never will. So it's in their best interest to have automatic enrollment. But because automatic enrollment is now the standard, they can't give necessarily a tax credit for that because the business isn't necessarily taking any initiative. So what they did is they actually have now 100% tax credit for the first 3 years. So you can go into a business, I can go up and down the, Queen Street in Southington and say, hey, you can start a 401k plan, cost you nothing for the first 3 years. And then in 3 years, it may be extended or whatever anyway, but that's pretty significant. So hopefully that increases coverage. I think that's probably going to draw a line through some of the state programs that they're trying to do, because why would you enroll in Connecticut My CT Savings? And their whole thing was it saves you all this money as a business owner, but if for a business owner it's free anyway. So I think that's going to be significant. You don't hear a lot about it because the small business startup plan market is it's crap that only idiots like me want to deal with, because there's no money in there. That's not a profitable area of business for record keepers or advisors. But I think the fact that you can go into your local bakery now and say, hey, 401k, we'll do it super efficient. Doesn't matter if you got 4 or 5 employees. Let's do it. It's not going to cost you anything. And here's how we do it. So that's a pretty big deal. So I'm excited about that.
All right. Well, switching to, so that, anything else on your side of the house, I guess?
No, I don't. I had something else if for some filler if you didn't have anything, but I'm looking forward to your technology thing here. What do you got?
Our producer Nathan is telling us to keep it short and sweet, so I'm trying to keep us moving along. And
yeah,
right now you talked about the headline is going to be Brian talks Secure Act 2.0, and then more than likely whatever I bring to the table. So but certainly not to cut you off short or to steer the conversation. If you have anything, what do you got?
Well, so I was going to talk about. Do I have another window here? Where is my other window? So I was going to talk just briefly about capital market assumptions, and it's kind of nerdy, but I promise not to make it that nerdy.
Go for it.
So basically, what happens is when you've got all these companies that make their predictions, right? So the ones that are like a year, what's going to happen in 2023? Who cares? They were all wrong a year ago. None of them predicted that both the stock and bond market would be down. But what the longer term ones are useful, because advisors will typically aggregate these together to use them as a basis for their retirement plan projection. So somebody's 50 years old and they want to know how much money they'll have in 15 years. You have to use a number. So you're using a number that's based on what people think the market's going to do or what it has historically done. And usually that number doesn't really move too much. But let me share a tab here. So what I have here is this is capital market assumptions from Vanguard. So this is based on this one came out for December 2022. So they're predicting over the next 10 years, U.S. equities, U.S. stocks will do between 4.7 and 6.7. So let's assume that their projection now for the next 10 years is 5.7. So you say, all right, well, what did they do? What did they do last year? What was their predictions last year, right? How smart were they?
I have zero faith in these so-called analysts, but go ahead.
I know. The longer term stuff I'm okay with, because it's a lot easier to predict things how they're going to be in 10 years than it is in 1 year. It's like wait.
Right.
So share this other screen here. So this is what they were in 2021. So they were predicting for the next 10 years somewhere between 2.3 and 4.3. So let's call it 3.3. So in the course of 1 year, their forward projected returns have gone from 3.3 to 5.7. So how does that factor in? Excuse me. Nate can edit out that good cough there. But so what happens is
I'm dying over here too. Sorry.
People will say we could just cough on 3 and just sync those up so that Nate can make them slide. So when somebody's 50, they say, well, the market got killed this year. My account's down 20%, what does that do to my retirement projections? And you say, well, actually, it doesn't change them, because when you have a bad year, your future projections go up, right? So if you were anticipating that you were going to do 5% the next 10 years, and you have an awful year where you're down 20, now you're going to predict 6% for the next 10 years. And that's not necessarily being, funny or deceptive with the numbers or anything like that. You're just taking that one bad year and say, well, okay, well, now we had a bad year. We're starting from a lower number, so the projections are a little bit higher. So when you take somebody and you say, all right, at the end of 2021, we predicted you'd have this much in 10 years. Now you're down 20%. The first year, we just basically raised the projections for the next 9 years. You kind of end up at the same number anyway. So the companies that put these out, they're forward looking, but they're starting from a much lower point this year. So you're going to see higher projections. So anyways, that's just kind of something that the industry does and how we factor in. And basically the idea is we're trying to smooth out the projected earnings, and because it doesn't make sense for you told them a year ago they were going to end up with $1 million at 60, and now you're going to tell them, well, you're only going to end up with 800,000. Well, that's pretty significant if you're just always keeping your assumptions the same. If you just always have in your system that the market's going to do 6% for the next 10 years, you're not taking into an account that the market just dropped 20%. So basically you just adjust your forward projection. So something to keep in mind as you're looking through these.
I love this. Look at the first bullet point under key highlights. This is why normals like me hate this kind of financial stuff. Next year, Vanguard expects a U.S. recession and growth of 0.25% to 0.5%.
Yep.
They just said both negative and positive in the same sentence.
Right. Yeah, I know. It is a pain. So they're saying a recession is, well, we sort of changed
down
the
quarters
definition, but yeah. So obviously they're expecting that to happen early in 2023 and then to make up for that later on. But if we go back a year, what were they saying, right? Economic recovery through 22 at a naturally slower pace. Give them maybe a B on that.
Right.
Tapering program sets the stage for Vanguard believing in a late 2022 interest rate hike. Well, we had a lot of interest rate hikes in 2022, so they started a little bit earlier. See inflation persisting above 2% towards the end of 2022. So they completely missed the mark on that, as inflation's been quite a bit higher than that. So
yeah, interesting.
Yep, interesting.
So
but I mean,
tell me,
Vanguard's not like a headline grabber or anybody who's going to be sensational. That's why I picked them. But I mean, you'll see now people predicting, well, market's going to be up 25% next year. You'll see down 25%. I mean,
right. Pick your analyst and pick your point in time, and you can get anything. You can get any answer you want. Tell me what you know about password managers.
Yeah, well, so there is one that I use and have used for about 5 years. I like the management aspect of it. I like the idea of when you're signing up for something new, to generate secure password. I love that. And
that's key.
Being able to create it at a significant length, because to me, I mean, you've seen those charts. You probably have one, like the idea of randomly guessing a 3-letter password is, they can figure it out in a matter of seconds. And then if it's like 15 with upper and lower case and alphanumeric special characters, it would literally take like a century or whatever. So the idea of just creating a 15-character password for something, even if it's accessible, who cares? Password manager is going to save it for me anyway. So why do I need to make it short? So I like the generate secure password feature more than
So
I guess the storage point of it is huge. But if I'm guessing, you're going to talk about LastPass, and they
we
had
are
a
definitely going to talk about LastPass. You
yeah.
ready for
So
this?
I saw a couple headlines. I didn't want to get into it because I'd rather not know and then ask you with questions. But the headlines I saw were LastPass's recent the compromised issue was more severe maybe than we initially thought. So I'll let you take it from there.
So let's lay a little background about password managers. Password managers are nothing new. There was a password manager built into, I think, Internet Explorer. I don't quote me what version, maybe as far back as Internet Explorer version 5, which is just well known as a horribly insecure internet browsing experience with ActiveX hacks and all this sort of thing. Their password manager had been exploited and hacked. To your point, a password manager. So, IT professionals, which I would include myself in that group, have had a love hate or push and pull relationship with password managers. On the one hand, if you use your password manager to generate secure passwords, like you just indicated, that is incredibly important and way significantly more beneficial than reusing passwords. You just like never want to reuse a password. That's one of the worst things you can do. Then the complexity of the password, you definitely don't want to use a dictionary word for your password. So, using a password manager to generate your passwords is one thing, and then of course using the ease of use of storing the password you just generated in the password manager is beneficial. But what's the obvious concern there? The password manager now becomes a single point of attack, right? A single point of failure. So then your passwords are only as secure as the password manager, and we've been bit by this in the past years ago, when Internet Explorer's password manager was exploited. And I think maybe even Safari at one point might have had their So the password manager is a huge target for hackers. So yeah, it's tough. We officially today recommend using a password manager. Our company officially recommends and resells LastPass.
Hmm.
So we know that these hacks will occur. Um, you know, uh, Microsoft Windows and Mac OS and iOS and Android, they're hacked every single day, but you still use them every single day. So yeah, I mean, these systems get hacked. The other password managers out there get to say nah, we haven't been hacked yet, or we haven't been hacked is where they say is what they will say, but really what they're omitting is yet. The other
Hmm.
thing too is LastPass has been incredibly transparent, or commendably transparent, with their their communication, and I actually have that up here. So this is from LastPass blog, and they will detail the exposure. There is some concerns here. So it turns out LastPass was hacked in August, and an infiltrator was able to gain access to their network and exfiltrate, which means take data away. And they were actually able to take what the password manager uses, what's called a vault, to store all your information encrypted. And the hacker was able to lift vaults and exfiltrate vaults out of LastPass. Um, Now, on the one hand, it's not a problem because the vaults are highly encrypted and secured by using the master password. So far as you're using a secure password for your vault, the vault is relatively secure, but not fully secure, because they when they have the backup of your vault, they can just run a dictionary attack against it, and
Right.
because they have the backup file, it's outside of the environment. So a lot of most hosted systems will have this mechanism where if you enter a password in incorrectly, like 1 or 3 or 10 times, they'll start slowing down your ability to try a new password. You ever seen something like that?
Yeah. Yeah.
So 3 wrong passwords and you got to wait 2 minutes.
Uh-huh.
So that mechanism alone can turn a dictionary attack into a multi-seconds or multi-minutes into billions of years.
Mm-hmm.
But when you have the file locally and it's outside of that login restriction environment, you could just bang against it and you're just as fast as your computer will process your dictionary attack.
Yeah.
So that is problematic. If you have been following our recommendation and securing all of your accounts with multi-factor authentication, if they get into your vault and they have your credentials and they try to log into your systems, they will need to be, where multi-factor is available, your account will be protected in that regard. So it's definitely problematic. It is the worst kind of attack, but there's one thing that is really, really particularly concerning with this hack, and this is what the internet's kind of up in arms about, or security professionals or what have you. It turns out that LastPass doesn't encrypt everything in the vault, and one of the things that it does not encrypt is the site addresses in the vault. So I'm trying to, I don't know if I'm going to be able to get this quickly.
And so why would they not do that? Just speed, like it's faster reading from the database if it's not encrypted, or
more than likely it's really it's worse than that. It's probably advertising or promotion or analytics. It's if they can see what websites you're storing credentials for, they can tailor their marketing to you, and they do have this thing where they can pull in logos and logo files for the record in your vault. So it's like, it offers kind of a more pleasant experience. You can see Google's logo on your Google account. You can see Microsoft's logo, so there's kind of that experience, but it's total conjecture why they won't encrypt it. But it's pretty well thought that, well, if you can see people's traffic, so to speak, you have quite a bit of analytics about your customers' browsing habits and things like that. So you can then tailor your marketing to that and that sort of thing. And that's really the worst. That's really kind of despicable, actually.
yeah, that's cringy. Yep.
Yeah, it's real cringy. So it's really, and then what's worse is the transparency about that tidbit is not they're not forthcoming about that information is really buried in a non-searchable like policy or technical document. And I won't take you and the audience through this whole deep dive, but I did do the deep dive after this came out, and Reddit was covering it. Everybody on Reddit was covering it in detail. And of course, everybody's comparing this practice to other password managers, their practices. So it's a big mess. And like I said, the other password managers get the benefit right now to say we haven't been hacked yet. However, I don't know if there's a forced hand. I know there's all this new legislation that's coming out for companies to disclose hacks and stuff like that, but I don't think the men in black are showing up at these security companies' doors and auditing their disclosures. You know what I mean? So it's like Trump and his taxes. Evidently, there was a law. There's a standing law that the IRS is supposed to audit the taxes of every standing president, right? And and for whatever reason, that didn't happen to Trump. So it's like laws can exist and the system just doesn't do it. And there's growing up, you think that things are really kind of like structured, and if it's written, it's going to be done. But like the government just doesn't work that way. It's just such a mess, and so I would only, and just to kind of tie that into my point is, LastPass, I'm giving LastPass credit for this communication. In August, when they identified that there was a breach, they sent a notice out, and then they sent a follow up here. And this is pretty damning for them. This is not good for them, and it's a pretty comprehensive follow up. and there's going to be a business implication for it. But here's my point. I don't trust RoboForm or 1Password or a number of the other lesser known. LastPass is a huge brand, huge.
Right.
Um, the other, I would say, a bigger brand than all of the other password managers out there. I don't trust those other smaller outfits to make the difficult decision to make disclosures that will negatively impact their business. You know what I mean?
Right. Yeah, and LastPass has gotten credit for that in the past of, releasing information that, other companies may not have, and being a little bit more transparent. They're not maybe more transparent because you don't know if somebody's not being transparent sometimes, right?
Right.
But LastPass has, got credit for that before. So, yeah, I mean, you never want to in this type of industry, and we even get it in financial services too. I mean, if you're, number one in the 401k business and number two issues a statement that they've been hacked, I mean, you're not going to dance on their grave and say, well, because it's only a matter of time, before you have to release some sort of information like that. So, yeah, this did the encryption thing to a normal like me does make me want to take a shower, give me the willies a little bit. If they're not encrypting site IDs and URLs for marketing purposes only, that's not cool.
They don't seem to address that very well here, and
Mm.
that's where they get dinged heavily. I'd give I don't even know how to score this hack or score the response. I score
Mm.
this response like a C plus, or
Okay.
B, because you don't get credit for doing the right thing. You know
Right.
what I mean?
Yeah.
And so the response here is very complete. They have recommendations of what you should do and what your exposure is, but really they really don't focus on, they do say it. The threat actor was also able to copy a backup of customer vault data from the encrypted storage container, which is stored in a proprietary binary format that contains both unencrypted data, and so they say both unencrypted data such as website URLs, as well as
Mhm.
fully encrypted sensitive fields such as website usernames and passwords, secure notes, and form fill data. What they should do here is, here's a quick link to list everything that is encrypted and everything that
Yeah.
is unencrypted.
Right. With
You
a
know,
reason, with an explanation as to
with
why.
a exactly. So this is like this. They glaze over this. Security expert goes every security expert right now is going like, whoa, 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 whoa. You don't encrypt the website URLs.
Right.
I mean, if a hacker gets a hold of these, which they just did, this becomes essentially a shopping list for phishing attacks.
Mhm.
So now we know all where you're going. So then you frame the phishing attack for that respective service,
Right.
and there you go. So I don't know. I don't want to dwell on it too much.
No, it's important, and it crosses both fields. I mean, if you're thinking about it from a hacker perspective, the URL data is nearly as critical as the password itself, because you know where the weakest links are on the banking side. You know where the leak, and usually the weakest links have been like on the email side, right? I mean, if you get into somebody's email, now you've got a whole additional
yeah, I
treasure
mean,
trove of data.
there's enough passwords circulating on the dark web right now where if you want to gain access to somebody's email or bank or whatever, hackers they can waltz right into just millions of accounts of
Mhm.
unsecured. My wife's Netflix account is ready for the taking because I know what her password is, and it's shameful.
Yeah.
Um, there's no value in it. However, if a foreign government or agency wants to engage in corporate espionage and exfiltrate intellectual property
Mhm.
from the United States or European companies, and they're using LastPass, and their production manager's vault was just exfiltrated by this hack, and now these vaults go up on the market, and then now the bad actor goes, okay, here are all the systems that we want to target attack this company. Knowing where they are is goes very far in facilitating the hack or the future hack. So Yeah, and then that comes in, there's new terms called spear phishing, which is like highly targeted attacks. And it's, everything from social engineering and phone calls and especially framed email messages that look like they're from, colleagues and, things like that. So,
Yep, especially around holiday time.
Yep.
And you brought up an interesting point. I mean, with hackers and what you do and some of the extent to what I do, you're always thinking about the worst case scenario. What if somebody breaks into your account, wires money out, or has a 401k distribution check sent to a PO box somewhere, et cetera? But the implications of, let's continue with your example of stealing your wife's Netflix password. There's all sorts of data that can come with that in terms of what she watches, when she watches it, how long. So the idea of
Metadata.
collecting this data and not necessarily using it for hacking for the worst case scenario, but some marketing firm buying this information and then, putting a fancy slideshow together and saying, we have these people's data. We know what they watch. We know if you want to do targeting ads, or here's the email list, or that kind of stuff, the repurposing and the repackaging of the stuff that could be scary as well.
Well, and that's what came out of the Facebook drama a few years ago. I mean, it came into light the value of metadata, and that's what you're describing. It's like not the piece of information that necessarily seems most important. It's the web of connected information that you can derive. Like it's almost like, well, I guess I won't get into it, but you know how your brain the way your brain works and interprets what you see, and they say that you actually have like a blind spot right in front of you, so you're never really looking at what you think you're looking at, but your brain is kind of filling it in. Like data is like that. So like you don't need the username and password for something, but if you have like all of the relevant and contextually relevant supplemental data that's kind of linking to that, you can actually then derive what the thing is that's missing. And so that metadata, you can, as you said, you could draw all sorts of conclusions and frame all sorts of messaging. And again, marketing is phishing, so to speak. And if I've made that comparison that hacking and marketing are they operate in the same psychological space,
You want the best data available. And, 100 years ago when you had the diner in town and you marketed to people in your diner. I mean, in your town, that was what you did. So, you're using the data that you have available, which is, I want everybody in my town to know about my diner. I'm not going to buy ad space in some magazine or some newspaper that's 200 miles away. So, Yep. The better the data, the better. I did pull up one of those while you were talking here. Did pull up one of these charts, which obviously you've seen a million times, but the difference between length of password and then the quality of it in terms of uppercase and special symbols and whatever. The one that jumped out at me was going from 10 to 11 characters. How long to a hacker to break into your account. So you want to use uppercase, lowercase, numbers, letters. Yeah, this is what I was talking about earlier, like how long, the difference between going from 10 to 11 characters would take a hacker 5 years on a 10 character password versus 400 years on an 11 character password. So,
well, then, I mean, keep going. Look at the leap from 12 to 13.
Yeah.
400 years to 34,000 years. Yeah, that's those numbers are always fun to play with.
Yeah, they definitely are. Yeah. Yeah, and it's not somebody sitting there, keying in passwords and trying it. I mean, these are massive systems that are just pushing out these passwords and trying to log in. So, I mean, 12 has kind of been my standard. Yeah, go ahead.
Oh, 12. Yeah, 12. Yeah, I think I'm at 16. I set mine to 16 to 24 characters. Because again, like if the machine generates the password for you and saves it and helps you recall it for use, like, yeah, I don't care. Make it 100 characters.
Yeah, exactly. Yeah, some of them have upper limits. I've
Well, that's
seen
the
kind of upper
disappointing thing
limits of
when I see a bank or some important agency or site have a disappointingly low character limit or weird password requirement. It's
yeah.
yeah, it's pretty disappointing.
Yeah. Or even people that aren't
Um,
using a password manager. The thing is to do I know we're at an hour now, but you can clip it, right? But
what were you
the
saying?
idea of doing passphrases and things like that, people use now, so that don't have the automatically generated feature. You can get to
Yeah,
20 characters pretty quick if you're putting a sentence together.
there's a competing school of thought now where it's like, well, it's better if you have multi-factor authentication and a password that you can remember. Use a passphrase, maybe a complex passphrase or something. Um, I don't know. Let me put a bow on the password stuff. Multi-factor authentication, every single account where available. I
Yeah.
still see boomers on my Facebook
Mhm.
feed posting that their account has been hacked. I still see it, and if they, unfortunately, Facebook still makes enabling two-factor authentication kind of disappointingly difficult. So still, like, if I feel like
Mhm.
if Facebook and Google ran some sort of comprehensive multi-factor authentication campaign that just tied in, just prompted everybody to watch a 1 minute video on it or something. They were, they have such penetration that they could probably do well to educate people on how to securing their accounts. So anyways, to put a bow on this LastPass hack, I think my recommendation is still to use Password Manager, even if you're using LastPass. I know that seems self-serving because we do recommend and resell LastPass, but I'm evaluating new products, and we are looking at LastPass to see if they're gonna continue to be in our recommended portfolio of products. I mean, same thing happens with antivirus. When we've gone through all of the antivirus products, and 10 years ago the virus landscape was quite a bit different. So you'd pick a corporate antivirus and then it would do its job. They all kind of did the same thing, and sometimes a new virus would slip through the one that you're using and you get an infection, and then you'd research that virus, and you would see, like, okay, well, the researchers tested that virus against the whole battery of antivirus products, and these ones were able to defend against it, right? So, but that didn't mean you just stopped switching you switched antiviruses just because of
Mhm.
one hack, because then that antivirus company would come out with a definition and now they're at parity. So it's that cat and mouse game. But then what happened was when the ransomware hacks came out, it really did prompt us to say, well, our antivirus at the time was not dealing with this successfully for a lengthy period of time, and it prompted us to go to the market, look at the solutions again, and we did make a change. So all systems are vulnerable: firewalls,
Mhm.
Windows, operating systems, phones, like even the software that you use, Adobe. So you don't just, like, pull the ripcord on one thing. This isn't the first issue with LastPass, but again, are they the most transparent, and that's why we're seeing these things? I don't know. So we are monitoring it, but just to put a bow on it, the recommendation still is to use a password manager to generate unique, secure passwords, 12 characters or longer, using numbers, letters, symbols, uppers and lowers. Um, what else? Multi-factor authentication, everything. Don't reuse a password ever. Those are the recommendations. If you multi-factor everything, if everybody knows your username and password, they cannot get in. That's a qualified statement, because, like, maybe there's weaknesses in the system, blah blah blah. But in effect, your username and password can be known, and that second factor will protect the account. So yeah, it's unfortunate, but that's the world we live in.
It is. Yep. No, that's all good information.
So any last words before we put this
No, I think we're good.
show in the can?
Last um last show of the year.
The last show of the year.
Yeah.
All
Our
right,
last
so
pass through of the year.
All right. Have a good new year, and we'll see you on the other side. We'll see you in 2023.
All right. Sounds good.
That does it for our show today. You're watching Finance and Technology Insights with Brian Williams and Eric Buhrendorf. He's Brian Williams of Northshire Consulting.com. I'm Eric Buhrendorf, CEO of EVERNET Consulting at evernetco.com. We record every Tuesday morning and release every Wednesday. And we look forward to seeing you again. Have a great week.